as you're growing your own business, the number one thing you get a lot of is advice, right?
Yeah. Yeah.
Some good, some not very good.
Yeah.
But the people that give you advice generally don't know what they're talking about because they'd be doing it themselves.
Yeah.
And the people that you're competing with or genuinely know what they're doing will never give you the advice because it's conflict of interest for them too, right?
There's a lot of risk you're taking on, even though like I'm saying like I'm buying a company. So theoretically it should be a less risky route. And I'll be honest, like my family, a lot of my friends were like, why are you giving up? You're climbing the corporate ladder, doing well. Why would you give all that away?
Being a jack of all trades is also being a master of running a business. And to some degree, you do need to be that, right? Because you can't just say, I don't want to do accounting, or I don't want to manage my people, or whatever it is, right?
Yeah.
You have to do it. You just absolutely need to do it, right? Yeah. Hi, I'm Parth, founder, CEO of FYORO. Today I'm joined by Kelvin Panitpichetvong, principal of Succession Capital. Today we're going to talk about his business and my business and the two intersections. He's looking to acquire and operate a business, and I have a business that I founded from scratch. So we'd be exploring the intersections, the challenges, the growth, and why we decided to base ourselves in Hong Kong. Hey, Kelvin, how are you?
Hey, Parth. I'm great, yeah. This is awesome. Thanks for putting this together.
No,
first time doing a podcast.
Yeah.
A little nervous, not going to lie.
Me too. It's the first time I'm doing one with no actual host, just kind of us having a casual chat. So,
yeah, no, exactly.
Yeah. So thanks to Monday for giving us this kind of space and studio.
Yeah, awesome space, I gotta say.
It's nice.
Really nice here.
Yeah. So yeah, it was great catching up. So, just for whoever is viewing this, bit about you and I, we went to school together. We did everything, including trading Pokemon cards together.
We did.
As luck has it, we kind of caught up after all these years, kind of rekindled, got back together, hung out. This time, obviously, with the wives. So what have you been up to? Where's life taking you?
Yeah. Honestly, like, it's been great, really like bumping into you again, right? Like you mentioned, high school friends a long time ago. And it's interesting, right? Because I've been working in banking kind of past 10 years, and I know like I've seen some of your, socials and LinkedIn. I know you've been like, starting your own business, which I'm sure we'll get into later. But, I kind of left banking, always kind of had this entrepreneurial kind of itch, right? My family comes from like entrepreneurial background. At that 10-year mark, I thought, maybe I should like do a startup. I thought about it and kind of like the risk that goes along with like starting from zero, that kind of held me back. And so I came across this concept called, entrepreneurship through acquisition, ETA in short. And the whole premise being that, you can buy this stable company, existing customer base, positive cash flows, all that, good stuff that comes along with like a company that's run for a long time. And to purchase it and to kind of like use that as a base to grow and to basically, apply the entrepreneurial side of running a business. And so, I've been kind of like been searching for the past kind of around 8 months now. And, during this time I bumped into you and then, you being, a business owner already. And so, I think it's a really great opportunity now for us to have a conversation, for me to learn from you, right, on the business owner side. That's kind of where I want to be. So, but what have you been up to? I'm curious, like how you start your business and everything.
Yeah, so, I think similar did the corporate route. Again, family also comes from entrepreneurs. So, for me, it was a little bit more of I didn't want to do corporate. More because I did not understand the whole structure of how a corporate was that I've not structured. Like if it's not ideal to me, I don't understand how someone else can execute it, right? That was just my mindset. In hindsight, it's quite narrow of me to think that way, but it kind of came through and, I started my own business, right? And it's funny because when I started the business, it was more out of a need to understand how to run an e-commerce business, how to grow it. And honestly, FYORO being a jade jewelry business came out of, just a need to learn. And it was kind of an offshoot of what I was doing anyways, which was the jewelry business. But, my background was always in finance, right? My family background was more in jewelry, but I was always keen on learning, how to sell online, because everyone was, right? Now, the only problem was in the jewelry space, we didn't have products that kind of had the price point to sell online. Because, before you swipe big amounts or big ticket items online, you really need to trust a brand. But, just by default, jewelry is so expensive that why would you buy it from a brand you've never heard of, right?
Right.
But starting with really, really low-end jade products kind of gave me a gateway to learn how to build an online business, how to grow from there. And it's been fun because in the last 8 years, you grow very organically, whether you like it or not. You will make mistakes, but, as the cliche goes, you don't really know what you don't know. And it's important to make your own mistakes. And I think there is a kind of adage to that cliche as well, that you don't know what mistakes you're going to make, and neither does anybody else. So you can't really learn from someone else's mistake, right? And, I know we've talked about this before, where I think, as you're growing your own business, the number one thing you get a lot of is advice, right?
Yeah.
Some good, some not very good.
Yeah.
But, I've told you this as well. My opinion is quite strong on advice, that the people that give you advice generally don't know what they're talking about because they'd be doing it themselves.
Yeah.
And the people that you're competing with or genuinely know what they're doing will never give you the advice because it's conflict of interest for them too, right? So it was kind of interesting. We just learned as we grew, and it's been 8 years. And since we caught up, it was quite fun because, I've been in the private equity acquisition space as well. And I think if people just start up in that space without actually having operated a business, you don't really know the nuances of what you're really looking for, right?
Yeah.
And I think it's one of those things where when you're in the venture capital space, you think that, you think businesses are run through books, EBITDA, NPAT, whatever, alpha, beta, gamma, whatever Greek terminology we use. But the funny thing is when you're on ground operating it, right, there's a whole... the way I like to think of it is the financial side is just the tip of an iceberg.
Yeah.
Everything, totally. The operational side, is kind of the bulk of it, right?
Yeah.
And I think that's kind of what was interesting, that when you said you wanted to acquire a business and operate it, I think that's brilliant because I think there's a big market for that just, businesses that don't have kind of a growth trajectory, but have a really strong continuum of solid, reliable, consistent EBITDAs, right? So that was really interesting when we connected. And, I think that it's great that we get to have this chat again. One thing I was curious about, that what do you think are the biggest challenges of kind of going from corporate to deciding to acquire and operate your own business?
Yeah, totally. Like I said, 10 years in a bank, corporate, had a stint at HSBC, moved over to Bank of America, was there for 8 years.
Yeah.
It was difficult. I think the same goes with people who want to do startups, want to go down that entrepreneur route. There's this huge risk of, there's a lot of risk you're taking on. Even though I'm saying I'm buying a company, so theoretically it should be a less risky route, but still, it's you got to identify the right company. It's got to be the right fit for me to operate, right? And so it's difficult. And having grown up in more of a structured way, going to a good university, getting into a good company, and then all of a sudden saying, hey, I'm going to go buy an SME now, right? I'm going to go buy a plumbing company, something like that, And I'll be honest, my family, a lot of my friends were like, why are you giving up? You're climbing the corporate ladder, doing well. Why would you give all that away? But a big thing for me was it really is the autonomy and the ownership that you get and the impact you get as a business owner. That's what kind of really attracted me. So obviously I set myself, a limit of kind of 2 years, If in 2 years I can't find something as good, okay, maybe I'm going to have to go back to the corporate route again. But really I think the benefits kind of outweigh the disadvantages. And I think it's worth, especially when, at that kind of mark where you have some work experience and you still have the energy to be an entrepreneur. And honestly, I feel like I should probably give it a shot, and try it. But yeah, definitely it's been tough. I think the first few months, you're just getting used to, when you're working a corporate job, you're used to the 9 to 5.
Yeah.
You get up and then you go into a big office with a lot of colleagues. you know, how was your weekend? All that small chat, and all of a sudden it's like you're alone, you know, essentially. And before you start like, you know, hiring people to help you out, I mean, you're pretty much alone in all the strategy. You're the guy that deals with strategy. You're the guy who deals with HR, you know, operations. Like everything is on you. And honestly, it's something that kind of excites me. It scares me, you know, sometimes as well.
Sure.
But more than anything, it excites me because, you know, you have the ownership and you're really able to like, you know, see the impact of everything you're doing. But I'm curious, you know, did you go through that kind of like same path? Was it kind of similar for you?
Yeah, I mean, I think first, you know, I wanted to ask you, why have you decided on 2 years? What is 2 years?
Yeah. You know, honestly, it's pretty arbitrary. I gotta say, it's very arbitrary. Yeah. And honestly, I feel like I've set myself 2 years, right? I'm saying I want to buy a company, but throughout that process, while doing due diligence on companies, if I, you know, see a particular industry, done a lot of research into it, and I think there's maybe a lot of potential, and maybe for a startup, you know, I might just like, you know, do a startup instead, you know. And so this 2 years, more than anything, I think it's just a kind of it's to give me kind of a goal, so that I gotta like have some sort of action, you know, something that I'm able to like, you know, deliver and say, I've actually made some progress, you know, whether it's buying a company or starting something from scratch. So more than anything, I think it's just setting myself to, you know, an actual goal to reach.
I think obviously it depends person to person, right? But I've realized that at least for us, any goal I've set in terms of what I want to reach, of course, that's one thing.
Yeah.
But any kind of time frame I've set, I've never followed it because
Interesting.
Stuff happens, right? You just don't know what happens, when happens, why it happens, whatever, right?
Yeah.
And there are many kind of situational market forces that will kind of really alter where you're going, right? Because if, let's say 1 year down the line, the market starts to pick up again, right?
Yeah.
You will see so many more businesses that come up at a valuation that is redonkulous, right?
Yeah.
Doesn't mean they're bad. It just means that their market is telling them, hey, you can value yourself a lot more. Whereas today, you might see a lot more startups or a lot more, I mean, for lack of a better word, you know, like traditional older companies that are dealing with B2B, be valued at really, really cheap. Now, it, again, doesn't mean it's cheap. It just means that the market is that right now, right?
Yeah.
So, and sorry, back to your question of, did I feel that when I started? Yeah, absolutely. I mean, I thought I knew a lot until I got into it. And then I realized that I knew a lot about one or two particular things.
Yeah.
But when you're doing your own business, at least when you're starting up, as you said, you're everything, right?
Yeah.
And I think that was the biggest challenge, right? Where you all of a sudden cannot pick a singular function and say, doing this 9 to 5, and I can switch off after 5 for one, which you can't do.
Yeah.
Well, you wouldn't. That's the other thing. You wouldn't want to switch off after that. It's just constantly running in your mind, right? But I think after that as well, it's one of those things where you realize that being a jack of all trades is also being a master of running a business. And to some degree, you do need to be that, right? Because you can't just say, I don't want to do accounting, or I don't want to manage my people, or whatever it is, right?
Yeah.
You have to do it. You just absolutely need to do it, right? And it's funny because when you start a business, the preconceived notions that everyone has, including myself, right, was this is what you do, this is the outcome you get, this is when you get it, and this is a good result. Turns out almost nothing is true. And, you know, I think when you are building something that's profitable and that's growing, one, you need to be unique, right? But I think if you're unique, you are already going down a different path from everyone else. So you have no idea what your obstacles are. You have no idea what the challenges are. So I'd never planned to overcome challenges that I didn't know existed, right? And then some things, again, you know, when people would say, look, you know, I had a lot of people I looked up to as well. And they said, look, one of your challenges, for example, will be banking. My background's in banking, right?
Yeah.
Theirs was not. So, of course, it was a challenge for them, not so much for people like you and myself, right? We understand a lot more than the average person does in banking. Whereas with someone else who brings, you know, the expertise of operations, that's something we had to learn, or we will have to learn, right?
Yep.
So yeah, I mean, I think that's been a very interesting kind of journey to take. But what do you think the kind of differences are of starting your own business versus acquiring in terms of your mindset, right? Like, you know, it's you're looking at entering a space that's very, very kind of targeted. It's very unique and / new, right? That you're looking at acquiring that. I think one of my biggest questions to you would be, theoretically, you know, it's great to say, let me get an old traditional company and buy them at whatever, 3, 4, 5x EBITDA. Are you able to find people that are willing to sell at 3, 4, 5x EBITDA if they've been attached to it for like 50 years? You're essentially asking them to sell for 3 years of EBITDA.
Yeah.
Are you finding these kind of people?
Yeah. You know, interestingly, I find that like when I tell people what I'm doing, right? Generally, people don't question the thesis around buying a good company and then building on that, right? Everyone kind of understands that, but everyone will ask me, like, do these companies actually exist? And if it's a good company, why would anyone be willing to sell it, right? And interestingly, I've been searching for like, you know, almost 8 months now. I started off, you know, going through intermediaries, brokers, and now I'm also looking at, you know, kind of off-market deals, searching proprietary. I mean, literally sending letters to business owners, asking them if they want to sell their business. And I think because part of the thesis of, you know, entrepreneurship through acquisition is that, you know, I think it's relevant for Hong Kong as well, in that if you have an aging population, very common in the US and Europe, where you have a lot of baby boomers who, you know, are at the age where they're looking to retire. And, you know, generally, if it's a family business, some of them obviously will have like children to pass it on to.
Of course.
But that's kind of where search funders and, you know, ETA comes in, is where there is no succession plan. They may not have children, or if they do have children, they may not be interested in running the business. And kind of in this 8 months, I have seen, you know, these types of examples. The fact that I haven't acquired yet, you know, means that I haven't, like, these examples are out there, but I haven't found one that's quite good enough and also the right fit for me. But then the question around is, you know, if it's around whether these companies exist, I have found them. And I think certain examples where in Hong Kong where, you know, there'll be, it's quite common now to have like families are thinking about, potentially, you know, maybe immigrating to a different country. And so I've seen somewhere, you know, it'd be like, you know, 80-year-old founder, you know, it's a couple, they have a son who's in his late 50s, 60s, and he has some children. And the son's looking to sell because he wants his children to go to the UK to study. And simply, you know, he wants to exit, take the capital and go to the UK, buy a house, you know, let the kids settle down. And in this particular case, it was a good company. Wasn't the right fit for me in the end. But you know, I think really the difficulty in kind of doing what I'm doing is basically finding the right company. Because once you find it, from the funding side, if I needed external funding, with the company, and as long as it's the right match for me as the operator, and the fact that you can buy these companies for cheap, right? Because in the SME space, generally the multiples tend to be lower. It actually works out. You can get those kind of 30% IRR that, you know, investors tend to want in this kind of space. But it really is a lot of effort to really find the company, and I think that the timing is really important as well, right? I mean, you being a business owner, you know, right? Like, it's a very personal thing as well, right? If you own an SME, the right timing in which you feel, okay, it's time for me to exit. You know, sometimes it's something that's outside of maybe the owner's control. In this particular case, where, you know, the owners, they're in the 80s and they want to keep holding on to it, but the son needs the money for his kid to go to the UK, right? So in this particular case, they're kind of like forced to have to sell. And so I think, the art really is in just trying to find the deals, trying to find that diamond in the rough.
But I think, you know, it's again, something that we've talked about quite a bit, where, you know, the structuring is, you want ideally like to keep a lot of the team on, at least for a few years, to kind of help you out. And I think that's something which I think, you know, when I was in this space as well, I think that structuring side was always quite like shoved under the rug as opposed to actually addressed very head on directly, because I think that is really important. That, sure, these guys have been phenomenal at what they've been doing for 25, 30 years, but they had the incentive to do it, right? Now, all of a sudden, if you're kind of buying them out and they know that, look, I've got 3 years left in the business, or I don't really have an equity stake anymore, or nothing substantial, incentive's gone. Right?
No, that's true.
And I think people forget that incentives are what drive people. And if their interest is in making money today and yours is in making it after 5 years, it doesn't work. It just doesn't work, right?
That's true.
So I think I think just the structuring side of it, it's very interesting to see where a lot of these businesses are at.
Yeah.
And I think that, you know, in your trade as well, you know, the other reason why I say that, as we said, the time frame is quite arbitrary, because you might find absolute rubbish for 2 years, and then in the 2.5 year, you'll find an absolute brilliant company. What, you know, in my humble opinion, I would not recommend is that because your deadline's approaching, that you kind of settle
anything,
for crap, right?
Yeah, that's the worst case. Yeah.
And I've been through that as a founder, right? Where I say, look, I've got 1 year to hit this target.
Yeah.
Now, the problem is that when you do that, you kind of forget everything else that you built yourself on, all the fundamentals that you believe in to hit that target. Yeah. Which I don't agree with. And I've done that, right? I've done that where I've said, look, I need to hit a certain sales number by this year for me to justify my time in this business, right? Now, the problem is I did that, sure. But at what cost? Lower margins, driving myself crazy, getting any customer as opposed to quality of customer, getting clients at a super high acquisition cost quick, as opposed to being clients that can be retained. Acquiring clients that I can retain, right? It's very interesting that, you know, people keep saying set targets and set timeframes, but I think that's just for someone who needs a kick up their butt. But if you are already incentivized to kind of grow, I don't think we need it, honestly.
Interesting.
It's actually for me quite a hindrance to say that's my set target, because again, the problem is any target we set is based on the parameters that we know today, right? But those external parameters change. It could be that 3 months down the line, your target could be either a lot bigger or just very different, right? I remember for us, one of my targets was to hit a certain sales number and then say grow into India. Right. India being where my roots are from, I kind of understand the culture a little bit more than the rest of the world. So I thought, you know, that should be my target. Problem is I focused so much of my energy on that, I kind of didn't focus enough on opening wherever my sales take me, right? So that's been something that's been very interesting. And I think one of the challenges that we faced is hiring. That's been quite a challenge, to be honest.
Yes.
And I think like hiring as well is such a dynamic thing. It's changed over time. It's been quite difficult to hire the right talent, honestly. It's not been fun. But yeah, I mean, yeah.
Actually, you know, Parth, I'll pose this question to you because, you know, as I'm looking at these businesses, right, one really important thing for me is after I take over, obviously I'll have a transition period with the previous owners, whether that be an earn-out structure or I'll buy their equity, you know, gradually to make sure they're, you know, incentivized to ensure my success, right? But the critical part is I'm also buying the people, right? I'm buying the employees. Obviously, I can't stop them from leaving, but, you know, say they've got 10 to 15 employees, assuming a few of them leave, ultimately, a lot of the knowledge just stays with the employees, and that's kind of the fundamental of what I'm buying. Kind of like, as an actual business owner now, how do you go about, you know, hiring, building the team out, and kind of how much do you want the team to be kind of running in autopilot, right? Do you want your team to be the ones who are driving it? If you take like a 1 month holiday, everything continue running smoothly. How do you think about hiring and like responsibilities and that sort?
Look, honestly, that's been my biggest challenge. Because, you know, as a startup founder, business founder, whatever, again, you and I both know the word startup is thrown a bit loosely. They say Meta is the world's biggest startup. I mean, they're almost, what, $3 trillion? I mean, startup, sure. But, you know, when you decide to start a business, you do everything yourself, right? Now, at one point when you're hiring, right, the biggest two things are, one, what function do you need to hire for? AKA, what does the business need? Or what is it that you don't want to do, that you want to delegate so you can focus on what you want to do, right? But also, you know, parting way with either equity or kind of paying a salary, to be very honest, right? The way I look at salary now, at least, when I started, was that if I'm paying you X amount, that's X amount less cash flow I have in the business. I never wanted to take money out of the business. It was just more, I viewed it as like an opportunity cost that I could have used that capital to buy more inventory or run a few more ads or whatever it is, right? So your first few hires are direct costs, right? I think it's very idealistic to think that, you know, they're going to add value from day one. They won't.
Right.
So it's been hard. Hiring's been quite hard. Retaining has been not so hard because you know we end up treating them quite well. Now, your question with the autopilot stuff, right? I think that the thing I've worked hardest to build is for my face to be disassociated with my business, right?
Yeah.
Which is why like I don't do podcasts so often. It's just I would like the brand to run itself.
Yeah.
I would like the products to be solid enough, and I would like the brand to kind of speak on its own terms, right? Now, I think in terms of team, the business value hinges on your weakest team member. And by weakest, I mean that you might have 25 nice people. As long as you got one bad apple, that's where your business stands, right? You piss off one client. You cannot say that, I'm sorry, 25 of us are really good. It just, you happen to encounter the one that was not so good, right? So when we hire slow, we hire steady. But I think that as long as you set up your fundamental values of what you're looking to hire for and stick to it. So for me, I've kind of penned it on my wall as well that I would like happy, humble, and honest. So we call it the 3 H's in our business because I need to speak a little bit of corporate jargon. So I like these 3 H's and 3 P's and whatever nonsense. But yeah, genuinely like happy, humble, and honest, right? And it's funny because we're looking to hire in my other business as well. And the thing is, when you are initially, when you're going in corporate, a lot of what you're told in terms of from HR recruiters of what you should do and what you should do as a candidate and how you stand out and all that stuff. Right now, when you're on the other end of the table, you feel like a lot of it's just crap, right? Like, I remember one of the lines that a lot of recruiters say that when I get this, I get so annoyed when people say something interesting to stand out. No, don't say something interesting to stand out. If you're good enough, you will stand out. I promise you. But don't throw in a random byline like, I enjoy golf. Like, sure, okay?
Right.
Or, when a lot of these guys say that, show and understand the business a little bit, right? If you are ass licking, it is very obvious, right? You'll see this as well when you're like hiring people and they're like, I've been a fan of your work. Like, really? Okay. It's a little extreme, no?
Yeah.
So kind of just cutting through all of that, cutting through people that are recruiter trained versus just being themselves. I always say, be yourself. One of the questions I always like try to ask in interviews are, what's your biggest weakness? And honestly, I don't care what they say. I want to see how they think about it, right? If you have a perfectly honest answer, great. If you're thinking about it, that give me a second, let me think about it. I've never thought about it before. Great. It's honest, right?
Yeah.
But the number of times you'll get the whole, my biggest weakness is I'm a perfectionist. Yeah, you've heard this crap, right? I don't settle for less. And, I like to focus on one task and finish it before I move on to the next. I can't multitask, yada, yada, whatever crap. I'm too committed. I'm too much of a team player.
Yeah.
Okay. So that's been hard. I think one of the other things as well, right, is the whole hiring process, at least the way I do it. I don't know if it's right or wrong. It's what works for me, right? I actually think for a lot of the functions, especially in the businesses you're looking for, right, will not be great at interviewing, right? For example, if you want someone in the back office, like let's say an accountant, whatever it might be, right?
Yeah.
Why are you judging them based on their oration skills in an interview?
Yeah. No, yeah.
You know what I mean, right?
Yes,
you might be an
totally.
absolute rubbish talker.
Yeah.
But your function doesn't need you to talk.
Yep.
You're not client facing. I don't
hard
care.
to do that.
Precisely, right?
Yeah.
So how am I judging your accounting skills based on either your history or the way you're talking? It's a bit weird, right?
Yeah.
And here's the other thing. When companies say, look, we hire accountants or auditors from Big Four. Why? I mean, of course, it's a very good thing to have, but that's not the only thing. Because I remember at least when I entered the financial space, I was like, do I want to go into a bank consulting, or do I want to go into a business that requires the function that I want to do? So, for example, if I wanted to be let's say a PR kind of person, right? Do I want to work for a PR company, or do I want to work for a bank and manage the PR function? I don't know. So I think that, a lot of these things are very set in stone, which they shouldn't be. I really think, if you're judging the person, judge their entire skill sets. What we do is we tend to say, look, here's a very short 20 or 30-minute assignment. Show us what you can do, right? And a lot of times it's funny because when people try putting their best work forward, it's very easy for me to tell, at least now, that is this something that's been done by somebody else? Or if it's done by you, I don't mind if it's not very good, as long as the holes I see are very trainable or coachable, right?
Right.
And there's certain fundamentals that you cannot coach. For example, in accounting, right? Let's say if you've made one error consistently throughout, I can fix it, right? But if you made different errors throughout, and I think it's because of lack of due diligence or you just haven't double checked your work, that's a personality trait now,
Yeah.
right?
Yeah.
Man, the number of resumes I've seen in the last 2 months, which have spelling mistakes, like basic spelling mistakes, right? Like some capitalize their I's and some don't on the same resume. You're like, dude, I mean, double check your work.
Yeah.
And then, you know, these are things where I don't understand because we're not like that. You know, we weren't ever taught to just hand stuff in fast. Do it properly, right?
Yeah. Double check your work.
Double check your work. Be diligent. The ironic thing is one of them said, I'm diligent and double check and misspelled diligent.
Yeah.
Just the irony of that, right? Okay. So yeah, of course, you know, hiring's been a challenge. And I think in your case, when you're looking to acquire these companies, right, I think that you will kind of have to try to find line between people that have been doing it for 30 years, that are very good at the job, versus kind of you coming in, because the whole point of you doing that is to grow the company, right? So I think keep in mind that if you're getting these people that have been doing it for 30 years, it's going to be really hard for you to change their ways. Really hard.
Yeah.
Right? And they might be phenomenal at the job, but there's a reason they're stuck at a certain EBITDA, right? Which is the same reason they're selling. They're not growing, right? So it will be a fine line between hiring new versus managing the old.
Yeah.
We juggle with that every day, and I don't have any sort of straight answer for that because it's literally our everyday challenge as well, like managing egos versus managing new ideas where, you know, I don't want to kind of put down new ideas, but if there's something that's been working for a while, as someone making the decision, generally I know what I'm doing because for me, yes, your new idea might be very good. It might actually be better than the way we're doing it, but is it worth the cost of me dealing with 10 people and changing the way they're doing it, teaching them something new, taking 6 months?
Yeah.
There's a whole heap of what ifs and buts, right?
Yeah. Yeah.
And I think especially in your industry, you'll see a lot of stickiness with people just not wanting to change their ways or kind of stuck in a primitive method of doing something that's been innovated 10 years ago.
Yeah.
Right?
Yeah. No, I totally agree.
I mean, that's one other question to you, that do you get any sort of pushback of people saying that, oh, but I've been doing this for 30 years. How are you as like a hotshot young one coming in and kind of revamping the whole thing? Are you seeing any of that right now?
You know, so I think one thing I do, obviously it's when I do meet these owners of businesses that are looking to sell, it's quite sensitive for them, right? Generally, a lot of them would want to meet outside of their office. You know, they don't want their employees to know that they're selling, obviously, right? Of course. It might cause panic. You know? And so one kind of indication I try to like get on, you know, the kind of the culture of the company is just really speaking to the owner. And, you know, I'm really big believer in the company culture mirrors basically the owner or the manager's kind of like, you know, personality and like their style of working. You know, if there are any red flags that I feel that are, you know, present when I speak with the owners in terms of like, you know, the way they do business, the personality, I think it's pretty safe to assume that it's probably a, you know, transient throughout the culture of the company as well. And, you know, I'll hear people who are, you know, doing things similar to me in the US and in Europe and kind of their stories about how, you know, it's a great company, the numbers are great, and the owner seemed a little bit off, but then they went ahead with it anyways because it's, you know, it's a great deal. Yeah. And I'll hear all these stories about how the first year is just absolutely horrendous. You know, it'll be like the first week, the existing employees come in, ask for pay raises. Yeah. You know, they know that, you know, they have the kind of, you know, the bargaining power here because they have the knowledge of the company. And for that particular case I heard, it comes down to, you know, that particular previous owner, you know, he was very transactional in nature and, you know, exploited, you know, the employees a lot. And so naturally you'd assume, you know, you expect the employees to be the same thing, right? Because it's so transactional. Sure. Okay, fine. That was a new owner. Okay, this is the time that I'm going to have to ask for a you know, ridiculous pay raise because like, you know, I have the negotiation power here. And so I think definitely very difficult. Ideally, when I do get to like, you know, the due diligence stage, right? then obviously I would want to request, some key, employees, if I could, have a meeting with them, to try to get a better sense. But I think, in the beginning, usually it's, if I feel like I get along with the previous owners and, they seem to be thinking kind of along the same kind of lines as me. And, ideally it's, as you mentioned about how often some, maybe these older owners, they're so set in their ways. But if the owner does, show some sign of like, they want to grow the company and they want to like, pick up these kind of like new ideas and, maybe they're just restrained by, resources, or maybe the owner is kind of at the age where he doesn't have the energy to maybe have to travel to try to like, grow in a certain area, but he wants to do it. And if I hear kind of him say that, him or she say that, the employees, they want to be able to continue to grow. And so just kind of take the clues from there. And those are positive signs. If I hear things like, whenever I ask about, usually one question I'll always ask the owners is like, if you were to continue running this company for 10 years, like, how would you want to grow it? And if it's, it's a huge struggle to even like try to like think of like any type of growth, then I think it's a problem. That's a problem. And so, I think I'd look at it from that sense.
Is it though? Because then my question to you is, if they had a kind of path to grow it, wouldn't they just hire and do it themselves, potentially?
Yeah. So then,
I mean,
I think like the reason for selling is really important. It has to be a genuine reason. I can't tell you how many of these kind of broker teasers I've received, and it's all just, want to move to a different industry. It's a great company, but owner's not motivated anymore, or it might just be a plain looking to immigrate. I'm not saying that it's possible, right? And I'll still look at them. Sometimes I'll still meet with the owners to see if it's true or not. But then if it's more of if the guy is like really 80 years old, and it's clear that he needs to retire, right? Those kind of situations, I feel okay. It's probably a genuine need for them to have to sell the company. And so, really it's, I think it's a lot of, detective work,
Sure.
No one's going to tell me up front. And I think, same in the business world, any types of like deals, whether you're dealing with suppliers or customers, right? No one's ever really that transparent. And it's a lot about, trying to like find the clues and trying to figure out what the truth is.
I think, but I think the other good thing is, right, that I think when you do it enough, you can kind of read through a lot of their rubbish and they're kind of just BSing you throughout. You can tell, right? I mean, as you said, if some of the excuses are very kind of rehearsed or told to them that, these are the 3 ideal things for you to say, you're like, okay, that's fine. Cut through the nonsense. Tell me why you're actually selling, right? Yeah. Because I'm not theoretically buying it. I'm buying it. So please tell me, right? That kind of ties in well with my next question to you. You and I both come from the credit space at some point.
Yeah.
We're both entering the kind of new business world. I mean, I did it a few years ago. You're doing it now. But, we're entering a business where, you're not seeing the same kind of stability. Hopefully you're seeing kind of explosive growth. How do you balance profitability versus growth? AKA, when I look at businesses and I see them heavy on the cash on the books, it looks great for an accountant, or if you're a listed entity, maybe. But at the same time, I kind of question why you're not reinvesting that capital to grow if you see genuine potential in it, right? So there's always that kind of play between growth, profitability, where the equilibrium lies. It changes across industry to industry. It's kind of transient in nature over time as well, right? That there might be companies that are early stage that are focusing on growth, but to what extent? To what end? What's your take on that, though? Because you and I came from a credit world where it was the most plain vanilla boring that I want you to grow at 12. If you grow at 14, I'm scared. If you grow at 9, I don't want you. Right? It's just the nature of what we came from, right? We were kind of more playing around with the risk profiles as opposed to the returns, and and that's another reason why I left the space, because it was quite regimented, quite boring, to be honest. But what's your take on that?
It's really interesting that you brought that up, and I'd love to hear your take on it later. Like you mentioned, we both come from the credit space where, generally compared to the equity side, we're more focused on downside risk, right? because that's all we get paid a fixed income, a fixed coupon, interest, or whatever. And that's kind of why I got into this whole ETA space of acquiring a stable company and not going down the startup route, because I have been so programmed in these 10 years to be always focused about all the risks, all the potential risks.
Yeah.
And so for me, like, I still want to be an entrepreneur, but buying something that's established, it made more sense to me.
Yeah.
And I think that, you know, so for me, like on your question on like, you know, profitability versus growth, right? Purely because I'm acquiring something and using that as a base, like, don't get me wrong. Obviously, once I do become the business owner, I would obviously want to grow the company, right? But I think at this point in time, as I'm looking for the acquisition, and the key being that me being an inexperienced operator, like you mentioned at the beginning, right? How, you know, it's completely different once you start operating, right? Compared to, you may have like, you know, the financial knowledge, right? The banking skill set, but actually running a company, having that operational expertise, completely different thing. And so I'm completely aware of that, and which is why right now for the acquisition, I'm focused on stability and healthy cash flows, right? Profitability. And if they can turn that, you know, day in, day out, and ideally the owners being somewhat passive in terms of their operations, then I feel comfortable coming in first year, potentially even 2 years, where all I'm going to do is come in, stabilize the ship, you know, as a new owner, plug in any gaps that I see if, you know, maybe employees leave, try to plug all those in. And then after that, after I've kind of proven that I can continue to run the business the way it was before, and then look towards the growth piece. And so that's kind of like where I'm at. But then my kind of question to you is, again, coming from the credit space, you briefly mentioned it, how like you didn't like just focusing on like, you know, the downside, right? Is that why you went all in and like, I'm going to start something myself?
Okay, so when I started this business, right, a little bit of a backstory, I put in $1,000 into it, right, with no plans of putting in any more. You know, as I said, I viewed it as an educational thing where, you know, I wanted to learn how to make a website, whatever. I think number one thing I realized was people don't buy your financial acumen, they're buying a product, right? And eventually that's what you focus on creating. I think it's super idealistic thinking, hey, from day one, have a great prototype of a great product. I can't afford it, right? I'd rather, with $1,000 have 10 products, try out the market, see what works, and then grow not just my client base or the business or the profit, but also grow the number of products we've got, focus on what works, and then grow the quality of the product over time, right? I've never really said this publicly, but for the first 3 years, I don't think I generated $5,000 of sales, not even, right? And I think when it comes to risk, right, what I decided pretty early on is, you know, as a person, I take a lot of risks. I buy a lot of random stuff I shouldn't be buying. I'm pretty kind of stupid that way. But when it comes to business, I'm pretty regimented in that take all the risks you want if your business can afford it. Okay. What I mean by that is that, for example, if I had to buy myself a phone, I will buy the best of the best. But if I'm buying it for the business, I will measure if the business requires the best or not. Now, initially, right, I decided, look, I want to run this profitably because I wanted to justify it to myself that, you know, it's worth my time taking out of my existing credit business, right? But eventually, right, I've never run a loss in this business. I've never reinvested anything apart from the profits it generates itself, right? And I think at some point, right, like I think in year 4, we grew to about 5 figures, year 5, I think 6 figures. Today we're well over 7 figures in USD terms. So we're doing well. It's just, you don't know what your kind of inflection point is. You don't know what triggers it. All you know is when you see something that triggers your business, when you see something that does well, do it.
Yeah.
Now, you know, going back to the point of risk, right? Again, this world is changing fast. It really is, right? I mean, it's growing up, it was a cliche to us. Now when you see it, you're like, oh, it really is.
Yeah.
That, you know, I spent this whole time learning how to do SEO.
Yeah.
How to, get myself out there, get my business out there, do the marketing myself, kind of network, grow the business, whatever. One fine day last year, I realized all of it is nowhere near as important as AI, right?
Yeah.
Now, getting onto AI is not something you can pay for, generally speaking, right? It's something which kind of is an amalgamation of everything, be it quality of hits, number of hits, how often people visit your website, reviews, everything. It's basically, as it says, intelligence, right?
Yeah.
So it gathers data from everything, not just something that people have paid for, because that can be detected pretty easily as well, right? And AI picked us up. So we had 4 or 5 clients walk in 1 week. We don't generally have clients that walk into our office and, it's more an online or remote thing, right?
Right.
And I wondered, what happened? So I asked them. No one's taught us to ask your customers directly. I just said, hey, if you don't mind, could you share with me what brought you to us? Because I want to focus more on that and make sure that, we're doing it well. And whichever part of my team did it, I want them to get the full credit for it. So please let me know. And with your consent, I'd like to share that with the team. And they said, absolutely. We got you from AI. And they sent me a screenshot. And I said, whoa. So I spent a decent amount of money on paid ads, on Google ads, and marketing, which at that point, my only metric was return on ad spend, which is kind of, it ties in pretty closely to acquisition cost of your customer. But at the same time, what I didn't realize is I was also building up my AI credibility, right?
Right.
So I think in terms of profitability versus growth, I think for us at least, growth without profitability doesn't make sense. Especially because I'm in a product business and so are you. Hopefully trying to acquire a product business. We don't get the crazy tech valuations. We don't get the software valuations. We are a simple multiple of EBITDA with some sort of function of growth, with some sort of function of IP if you have it, whatever. But we don't have the, 99x multiple because you have some breakthrough technology. We don't. We're not reinventing the wheel here. We are just greasing it a lot more, right? So I have never grown without profit. I've reinvested every single cent back into the business. That I've done.
Yeah.
That's not to say we're not taking risk, right? Because any sort of inventory we've got is risk, right?
Yeah.
Any sort of asset we've acquired is risk.
Yeah.
Well, I mean, in today's day, cash in a bank is risk as well. We know that. But yeah, so it's something where I don't really juggle with. I'm pretty set in my head that I want to grow profitably. To what extent does that hinder my growth? I don't know. I honestly don't know. And again, there's no right or wrong answer, right? It's what works for you. Because I think when you acquire a business as well, right, just because they've been doing it a certain way, the whole point is for you to go in and see how you can grow that, right? So it might be a 2-year cash burn, but it might be 5 years of stupidly explosive growth, which is not a bad thing. Or it could be that if you reinvest everything into growth for 2 years, you might not yield any results ever. But there's so many intangibles that come with it that you might learn exactly what not to do, which I think is super underrated, because if you spend money and in 2 years learn what not to do, they might have actually saved you 8 years of trying and failing. I don't know, right? I think I personally don't juggle with it. And I think that's been kind of beneficial to our business, that it's never even occurred to me to raise capital for my business, which is why, when we have this conversation, it's quite, to be honest, it's quite interesting because you have no agenda. I have no agenda. It's not like I'm selling out. It's not like you're buying me. So it's just cool to have 2 different perspectives on kind of very similar concept of, are we growing profitably? I don't understand how people don't. Doesn't mean it's wrong. It's just, it's not in my kind of understanding realm, right? But yeah, I mean, I think, what's your take on, what do you think? Do you think what I'm doing is something you would also do? Is there something you'd probably do differently? What do you think?
I think I think it's very interesting that you kind of have brought up this whole growth versus profitability thing. I think there's so many. I think one reason why I think I decided to acquire an SME and focus on the cash flows is, if I was to go, say I went down a startup route, right? Maybe not, say I was a partner with a tech guy, to look up for and try to fetch high valuations, right? Have some crazy idea, and essentially just focus. I don't care about revenue. Just focus on building like, a user base, and a lot of these like, apps and all these tech companies in like the past 10 years have like focused on that, right? And you don't even know if the business model is like proven or not. And for me, I feel that when you're focused on the balance of both growth and profitability, I think that's when you know for certain that at the same time as trying to achieve growth, you're constantly evidencing that your business model works. And you don't know if the business model works unless you see revenue come in, right?
Yeah.
And I don't think it's right to just take some metric like, user base and then claim that you're going to have so many users in the future. By that time, we'll figure out how to monetize it. Honestly, I don't think that's the right way to run a business. And I think, honestly, it really worked in these past 10 years because interest rates were really low. When venture capitalists and investors, they can borrow crazy money and like,
with their capital.
Yeah, sure. Loose with the capital.
Yeah.
And that's the reason why a lot of these like, have gone bust, and because no one's pumping money into them anymore. And fundamentally, the business model just never worked. A lot of these type of like gig economy type apps, right? There was a famous one in Hong Kong, Deliveroo, that didn't do well. Yeah. And just business model doesn't work. And I completely agree with like the way you're running your business. Like you're focused on profitability at the same time as trying to grow and reinvesting in the company, right? But then also ensuring that it remains profitable. And I honestly think that's the most sustainable way to run a business.
I mean, also at the same time, I think that's one of the kind of benefits of not raising capital, that because it's my capital, I'm so disciplined with it. Yeah. I think one of the worst things that we've seen in the venture capital space is when people get money pretty easily and all of a sudden they're not so regimented with that capital, and you end up losing it because you don't care as much as you would if it's all yours, right? Which is why I think that, if you're in the credit space, at least you're disciplined that, okay, yes, you've borrowed money, but there's a time frame to return it. So I don't know. I mean, I don't see another way, right? That's I think the other thing, right? And I think that while running a business, like profitability and everything, these are all like tangible measurements that we can see. I think that there are many other things that we build out that you will definitely see in anything you acquire, that there's a lot of intangible value added, right? That it's not on paper, but it is surely there, right? That ranges from branding to loyalty to customer service to genuinely solid product. Because I think, we discussed this before the podcast as well, right? Like yesterday, where there is kind of multiple factors to running a business apart from your books. That customer loyalty is a big one. Branding is another big one, right?
Yeah.
Like, today, for example, there might be much bigger brands that exist, but I know like if some of the big boys close down, it's going to annoy us, but we'll find an alternative.
Yeah.
But if Coca-Cola closes down, that's going to hurt me genuinely, right? I like my Diet Coke, right? And that's the value of a brand. Paired in with a rock solid product, right?
Yeah.
And at the same time, right, we discussed is that, look, I mean, I've got a Samsung phone, right?
Yeah.
Functionality-wise, it's brilliant.
Yeah.
Service-wise, I've seen what Apple does, and they are phenomenal. Like you walk into the shop, you're taken care of, you're spoken to, the product is fixed, right?
Yeah.
Now all of a sudden, to me, an Apple is not quite as nice as a Samsung to use, but that's just me personally, right? But because your customer service is so good, you're like, man, I want to be in that ecosystem.
Yeah.
So I think building out these factors, it's interesting that I think people don't realize that when you're building a brand, I think having a USP is really important. But a USP doesn't have to come in the form factor of a product. It doesn't have to be something unique in your product only.
Yeah.
It could even be that your customer service is phenomenal, right? You take care of your clients. People also, when they're spending their money, right, they don't want just a product. They want the full stack experience, right?
Yeah.
Everyone knows you can get these products for cheaper directly from a factory, but they don't use it. There are multiple factors of trust, brand, whatever it might be, right? And I think we need to focus on that. So at least for us at FYORO, customer service is paramount. That no matter what happens, you will be spoken to by a human being. And if it's something major. Doesn't have to be a big client. It can just be an issue.
Yeah.
And recently it's been shipping, tariffs, all these things, right? More often than not, I will deal with it.
Yeah. Yeah.
It's been I think very interesting to learn that apart from just profitability and growth, there's also building that customer loyalty. And I think especially when you're acquiring a business, right? You'll also see that most of these traditional businesses generally have a fairly stable, loyal base.
Yeah.
Which is why their EBITDA is so predictable,
Yeah,
right?
exactly. Yeah.
And I think that is such a value because when we're juggling with our marketing, we're seeing that there's a big spread between acquiring a new customer versus retaining your existing one, right? In terms of how much it costs you. Acquiring a new one is not just hard, it's expensive.
Yeah.
Plus, you don't know if they'll repeat.
Yeah.
Whereas with an existing one, it's the lowest hanging fruit because they're the likeliest to repeat purchase. But also, I think it ties into the fact that I've never looked at profitability on a transactional basis. I think if somebody buys something from us, that's a transaction. If someone repeats, it's their loyalty to our brand. That's business to me. I've never cared about one single transaction that even if I have to take a hit, I'll do it.
Yeah.
I mean, I know when the US announced the tariffs, we've taken hits, bad ones at that. But I never blinked an eyelid because I said, look, I promised you this price, this product on this date.
Yeah.
You're going to get it. As a consumer myself, I would be so annoyed if I bought something, paid my money, and then all of a sudden the situation changed. It's not our fault. It's the government of the United States. I get it. But at the same time, because I delivered it, the kind of loyalty we've built because of that's been phenomenal.
Yeah. Yeah.
And for what, a few dollars? Okay, you can get that, right?
Yeah.
But I think when you're looking at these brands specifically in Hong Kong, the other thing that I think we didn't mention was that if you've survived in Hong Kong for 3 or 4 years, Hong Kong is so expensive that you kind of naturally filtered out the people that can't sustain, right? Because I think you're paying almost probably 40% more than you would in any other major city in the world. So if you've been able to support yourself by your own revenues for 3 or 4 years, you're pretty okay, right? What do you think?
Yeah, totally. I think it's been a very difficult, business operating environment in Hong Kong the past few years.
Yeah.
And another very common question I get asked when I tell people what I'm doing is because I'm focused on acquiring in Hong Kong.
Yeah.
A lot of questions around why Hong Kong? Why don't you look at a different country? And I think it's a mix between I'm very optimistic about in fact not even the medium term. I think Hong Kong's picking up even in the short term. I'm optimistic. Yeah. And if anything, I think there's more in terms of opportunities to buy a company now that is, may have taken a hit, right? Since COVID, since the kind of public unrest. I think there are opportunities now to buy companies that are actually good, may have taken a slight hit, maybe have leveled off a bit, but the owners are looking to sell for, for various reasons.
Yep.
And, I think that, especially when I speak to some investors who aren't based in Hong Kong, I think Hong Kong still ultimately, it's, an irreplaceable gateway to the second largest economy in the world, China, soon to be the largest. And, it's still a great place to do business. You think of, low taxation. You think of the kind of the common law here as well. You think of the amount of talent, right? Both on the financial side, all the type of professional business services, everything that you need in order to run a business here. Sure. It's all here, freedom of flow of capital, labor. And on top of all of that, Hong Kong's a great place to live as well.
Precisely.
Yeah. In the summer, you can go out on a boat, you can go to the beach. In the winter, you can hike. It's a vibrant place as well, very multinational. And so, I'm just really, really positive about Hong Kong. And, that's why I think, it's still a great place to do business.
I think you and I both, right? I think we're so positive. That's why we're still here. We're paying the high prices. We're here. I think ultimately, right, we both grew up in Hong Kong. There's a reason we haven't left. We love the city. It's got everything to offer. It's safe. I keep going back to that. It's just safe, right? Yeah. Stuff's easy to open. You can open a bank account, open a company. It's not hard to do. I think eventually what's been happening as well is a lot of people have been saying that, look, business is not what it used to be. Well, yes and no, right? That, of course, it's changed. but have you changed with the time? Have you changed with the times? Have you kind of managed adapting yourself to today's environment, right? You know, it's great to say, look, I have been doing this a certain way. You know, we've grown. I've done whatever, my SEO, I've grown my people, whatever. But if you're not in line with the likes of AI, for example, or innovation today, and you're left behind, you can't just sit there complaining saying the Hong Kong economy is bad. Is it? I remember, you know, when, for example, taxi prices, they're now at $29 flagfall. When we grew up for about, 10 years, 15 years, it was $15.
$15, yeah, I remember that, yeah.
Right. And then it went from 15 to 16 to 18 to 20 to 22, 24, 27, 29. I think that was the order, right? Which sounds like, oh no, it went up really, really fast. But if it's only doubled in the last 15 years, is that bad? I mean, that's not really that bad, is it? Or like stuff like McDonald's in Hong Kong, for example, growing up, twist cone, $2. Hash brown, $5. That's all quadrupled in prices. Yeah. So I think for comparison's sake, I think Hong Kong is still not cheap, but also for like the things you do, it's not very expensive either. In terms of food, it's cheap. Public transport's phenomenal and cheap. Of course, labor is expensive, but you're hiring literally in the most expensive city in the world. They also have living costs, right? I am super pessimistic about Hong Kong because for the same fundamental reasons that we believe in it, everyone else who's still here does too, right? I also think that data's a little out of whack when people say that, oh, many people left Hong Kong during, you know, the unrest and COVID. But how many of those people intended to leave Hong Kong anyways? AKA, you know, you've been in the banking space where they come in here saying, I want to be in Hong Kong for 6 years, get my promotion and go back home. Okay, now that 6 years just became 5 years because, you know, I didn't want to be in Hong Kong during COVID. But they were going to leave anyways, right? Or how many of them left for other reasons? And how many of them left because they have a means to leave? Versus there are many people in Hong Kong that didn't have a means to leave that wanted to leave. And then there are other people that had a perfectly easy way out but never left. I just think that, you know, I've been taking a lot of the new data with quite a grain of salt.
And I'll also add that, in fact, the population numbers have been going up. Yeah. Purely because, you know, there are a lot of mainland Chinese people who, through the talent visa scheme, a lot of them are coming down to Hong Kong purely because it's just a very attractive place, you know, for them to work, to raise a family. And so there's a lot of talented people coming in. And I feel like as business owners who are focused in Hong Kong, you know, as long as we're focused, you know, on providing a service or a product that is, you know, catered towards not just a specific, you know, area of the population, but, you know, to the general population in Hong Kong, regardless if you're a new immigrant or not from China, I think there are a lot of opportunities because, you know, they're here, they need to like buy products, they need services. So opportunities are there.
So then I think that ties in well with some of our final thoughts. What do you see your plans going ahead? Do you see yourself, one, being in Hong Kong, and two, kind of growing your business the same way? Or where do you see yourself?
Yeah, I mean, for me, right, short term, to buy a company, stable the ship, right, grow it. Yeah. You know, I'll hear a lot of people that are doing the same thing. They're like, I want to do a roll up, right? Yeah. I want to buy a ton of them, roll them up. I want to do like a whole code structure with diverse and everything. You know, I'm just being realistic, right? I just want to buy one good company first, and then pick up the operational experience, and then just kind of take from there. As difficult, it's going to be difficult. So I'm not going to like kid myself and like, you know, think too big for now. But it's in the back of my mind.
Yeah. Sorry, I just had a random thought actually. I think because you're doing it this way, right? I think you'll be much better at acquiring companies going ahead because, you know, I remember about I think 10 or 12 years ago. After I was just in the finance space, I had a few years experience, right? I was like, no, that company's not very good. That's okay. That's very good. But you're judging based on books. And the other thing that we don't mention is most of your books are hindsight. When you've accounted for it, that was last year. That really doesn't account for right now, right? Yep. But when I'm operating a business right now, it's funny because sitting on this side, when I look at another business and I see that, look, for example, operationally, let's say they're rubbish, right? But they've got a way to innovate new products better than anyone else. You can spot these gems. But you can only do that once you've operated, right? So I think if you buy something and operate it first, And then you see a second company where you're like, okay, look, their financial teams are not doing very well. Their customer service is not very good, but the product is fundamentally phenomenal. They just don't have the right execution. You'll be able to spot it a lot better, right?
Yep. Exactly.
Or you'll say, okay, look, I think that everything is not very good, but their sheer brilliance in managing their numbers is good. You know that, okay, maybe I can just acquire that part of the business, acquire these people, whatever. I think it makes you much better at identifying talent and identifying, like, you know, I think gold dust as well, right? I mean, I think that route is just fundamentally the best way to do it, the way you're doing it.
And
right?
just one thing I'll add is that I think the whole roll-up strategy is also very, very dangerous in a sense, especially if you're, you know, not in the industry already. Because I think once you've kind of settled on having to do a roll-up, having to merge a bunch of companies together, and that's kind of like your whole thesis to investors as well, you're more likely to buy companies at a higher multiple.
Yeah,
because you're so focused on all the synergy in the future. So it's okay to buy more expensive because eventually it's going to be this huge company that you put together. But yeah, it's as I'm sure you'll be able to tell me as well. It's just so difficult. Running one company is difficult, let alone running two, and then try to get these two companies to merge, get the people to work together. That's a whole different ball game. And then, you know, if on the outset you're trying to do that, I think it's not doable, but difficult, very difficult.
I mean, look, that's the other thing I'll ask you. What's a merger? It doesn't exist. If you have two people working together, right? I think if everyone is flat, right? It's very idealistic and very LinkedIn-esque to say that I like a flat structure. I think flat structures are so inefficient, and hierarchical structures as well. It just annoys a lot of people. Again, the balance is somewhere in the middle. The equilibrium lies somewhere in the middle, right? Where you need something that, yes, it's got a hierarchy to it, but you've got areas that are flat. And I think when you're kind of merging two companies together, the problem is you'll have two people that are kind of clashing. Then who has the upper hand?
Yeah.
Right? I think that the best way for me to learn specifically, right, was always when I had to do the function myself and then figure out, okay, well, what is it that I'm not very good at? Let's get people to do that for me. Because then, again, look, there's a fine line today, especially with the information efficiency today, of should I hire in-house or should I just outsource the function? If I'm outsourcing the function, it might be a lot cheaper, but it might just not work for you because you need that function. You don't know, right? So I think that kind of merging a few companies together and then operating it as one is quite a presumptuous kind of strategy to say that let's clump a few companies together and hopefully it works as one.
Yeah.
What if you don't need that function internally?
Yeah.
Right?
No. Yeah.
You've already spent money for it.
Yeah.
Now what? You're stuck with it, right?
Yeah. Yeah.
So I think that's quite. I don't know. I like your strategy, but I just do.
What are your long-term plans?
Look, I don't think I will exit. I like running this business. I get a kick out of when clients message me, call me, write to me saying, "Hey, your piece added value at my wedding," or I wanted to create a custom piece and you kind of encapsulated my vision really well. Your team did a great job. You shipped it on time, whatever that might be, right? I get so much validation from that, just knowing that I've added genuine value. Because, okay, to be perfectly honest, mate, you and I were in a space where what value did we really add? We took advantage of information inefficiency. X meet Y, did a bit of structuring and said, hey, deal done. But at the end of the day, I never had the satisfaction of, yes, we made money, but I never had the satisfaction of I've added genuine value to your lives, right?
Yeah.
And I think as long as I continue to do that, I'm more than happy doing this. And I think that's another part of growing a business, right? Where you know eventually that I'm not trying to grow my business to be a CEO. I'm trying to find things that I don't want to do, hire for that, and only to be able to buy things that buy the right to do things that I want to do, right? For example, I enjoy buying and selling. I enjoy fundamentally creating a product and selling it. I enjoy the trade.
Yeah.
I'm not a fan of everything else that goes behind. I'm not a fan of media or photo editing or inventorying or HR issues or accounting. I don't like doing it. I just don't, right? So I think as I'm growing, I'm trying to like delegate that stuff so I can focus on what I like doing.
Yeah.
So long-term plans, I'm going to be in Hong Kong for as long as I can. I love the city.
Yeah. Yeah.
I think it offers me everything I would want.
Yeah.
And I think one of the other fundamental benefits of Hong Kong is you can operate from almost anywhere in the world being in Hong Kong. You get access to Southeast Asia, China, whatever that might be,
Yeah.
right?
Yeah.
And it's easy to do from here. So I think that I'm here. I'm not really going anywhere, hopefully.
Yeah. No, same.
And
Yeah.
and it's always great, right? Because, you know, I think on a final note, I think that you and I grew up in Hong Kong, right? We weren't really in touch for about, 15, 16 years? But when we got together, it was so easy because we didn't have to explain where we're coming from, why we think a certain way, because we were brought up in a very similar capacity, right? And I think that's the other beauty of Hong Kong, that, you know, it is such a unique place where everyone belongs here and yet nobody belongs here. Do you know what I mean? Like, we all are we will always be foreigners here. And I think the feeling of being a foreigner in Hong Kong is what gives me the homeliest feeling, right? And I think that's really cool how we can reconnect with people after 10, 15, 20 years. But if you've grown up with them, went to school with them, I think because our mindsets are so similar, I don't fundamentally see the Hong Kong mindset anywhere else in the world.
Yeah.
I think people are just built differently everywhere else. Good or bad way, I don't know. I realized that everywhere else I traveled to, I thought everyone was super nice, until I realized if I think everyone else is super nice, that's probably the norm. We're probably fundamentally not. But I think with Hong Kong as well, I think it's very misunderstood in that way. Where, you know, I had my knee surgery, about 1.5 years ago now. So, funny story, while going to my office, on the corner there's like a valet guy, and he stopped me while I was walking towards my office, and he yelled at me saying, "Hey." I said, "Hi." Why is he yelling at me in the morning? He's like, "Hey, you, be careful." I said, "Okay. Your leg is not fully recovered. Be careful." Like, okay. But imagine if someone else saw that, they'd just be like, this guy's yelling at him.
Yeah.
But he means so well.
That's
right?
the way he shows that he cares.
It's just the way he shows he cares.
Yeah.
Or even I remember like sitting in a taxi, right? It's just the small things about Hong Kong. I sat in a taxi and I saw that, you know, I was in the taxi line on Canton Road in TST, right?
Yeah.
So my wife sat in the car, in the taxi, and I saw that the taxi in front of us, there was like an elderly woman going in. So I got out and I told my taxi driver, and just give me a minute. And the taxi driver looked at me, made a grunting sound like, "Heh." I was like, okay. I went ahead and I helped the old lady. I'm like, "Hey, can I help you with anything?" Whatever. And then she's like, "Oh, God bless you," whatever. I helped her a little bit. And the taxi driver said, "Thank you." He went. I went back into my taxi, and then the guy looked at me. He turned off the meter and turned it on again. That's it. It's just such a subtle way of saying, I cannot take money from you because you were helping someone else. How can I charge you for that, right?
Yeah.
They'll never tell you. It won't be marketed. It will never be that. But it's these small, subtle things where you're like, Hong Kong really is awesome that way, right?
Yeah.
Again, as someone who doesn't really speak Cantonese fluently or much at all, you kind of get a bit like, why are they so angry all the time? Until you realize they're not really that angry. They're just really genuinely who they are, right?
Yeah.
They wear their emotions on their sleeves.
It's like,
right?
I care about you, but I'm not going to let you know.
Or I'm going to yell it at your face.
Yeah.
That I care about you. I hope you know that.
Yeah.
Sorry. But yeah, any final thoughts from you?
I mean, like, I just hope that we can sit down again, you know, in like 10 years and like be able to share kind of like the next stage of our progress in terms of, hopefully by then both of us will have, you know, bigger businesses. And I honestly hope that we're also right about Hong Kong. I honestly believe that, you know, we will be. I think that in 10 years we'll be in an even better place than we are now. And I just remain optimistic. And I feel that, you know, if you're going to run a business, you want to be an entrepreneur, you just got to be optimistic, you know? And I feel like, especially, you know, if you're managing a company, managing people, the more optimistic you are, the more likely you're gonna, you know, do well and to succeed, because, you know, you kind of, you know, chart your own path. And I think that's also another thing that, you know, I constantly try to like, you know, learn every day, right? How to like, you know, think more positively as well. Again, coming from the credit space, we're always like, what's gonna go wrong? You know, there's so many things that are gonna go wrong. But yeah, closing thoughts. I think just got to remain optimistic.
You know, I once heard as well that it's easy to be pessimistic, it's much
Yeah.
harder to be positive or optimistic, right?
Yeah.
It's very true, right? Because I know that, you know, especially when you're in the credit or venture cap space, our job nature was to poke holes in somebody else, right?
Oh, yeah. Yeah.
Which sucked, honestly. Because being on this side of the table and operating your own business, you're like, you think I don't know that? Of course we know that, right?
Yeah.
We're not stupid. I see this every day.
Yeah.
When people are like, oh, but what are you going to do when shipping prices go up? I know, I'm facing this literally every day.
Yeah.
But it's what do you do to look past that, right?
Yeah.
And I think on a closing thought, right? I think going back to something we discussed in the middle, what do I look for when I hire? Positivity as well of that. Because I think delivering a solution or coming up with a solution to any problem, it's not what your solution is, it's how you come up with it, right? And if I see that in you, that you have the capability of figuring out a solution or the best solution, that's probably most likely what's going to get you into our business, right? Whereas, you know, if you can sit there and poke holes, I mean, anyone can poke holes. Anyone who's got a little bit of experience can poke holes.
Yep. Yep. Yep.
So I think in closing, I think, you know, we're both positive about Hong Kong. I think today's conversation was great because I think it's just a different platform with all of this equipment and nice area. It's cool because it's not like this conversation's too dissimilar from what we have anyways, right?
Yeah. Yeah.
It's just more formal-ish, but it's just what we talk about anyways, right? And I think these are the most genuine thoughts that we came up with. So it's great. So thank you so much for
This is great. Yeah. Thanks,
doing
Parth.
this.
Yeah.
Thank you for kind of doing this. Let's do this again at some point.
Definitely. Yeah.
Hopefully before we have more gray hair. But yeah, thanks guys.